All right. So, what's up for you guys watching this on the YouTube replay? I appreciate y'all being here. We're going to be looking at a lot of stocks live. I'll give you a quick portfolio update. The market is green right now. We're up 0.56%. Still, we're red year to date, 1.35. This is my dividend growth portfolio. Every stock in here pays a dividend, and every stock in here is also in the S&P 500. Here's my total equity in each stock. My larger ones are at the top there. And we also have a small Roth IRA. Our Roth IRA is only 700 bucks. We started it less than a year ago, but we have two stocks in here. We got Kroger. Kroger's like a grocery store. They've been crushing it, man. They're pretty close to an all-time high right now. So Kroger's doing good. We're up 9% on them. And we have Innodata as well. This is one of my favorite high growth companies right now. We're up 15% on them. We also have our Mumu portfolio over here. This is like my buy and hold account. It's like a mixed bag in here. Some stocks are up, some stocks are down. We have Powell Industries reporting earnings on the 6th, which is tomorrow. So that'll be very interesting. This has been one of my bigger winners. We're up 140% on them. So they'll either go up or down a bunch tomorrow. Amazon reported earnings a couple days ago. The earnings were all right. They went free cash flow negative. And yeah, what up? What up, Carlos? Yeah, we'll check out Tesla in a second here. Yeah, happy Monday, guys. And here's my highest yielding stock right here. They've had a nice recovery. Like, look at these three candlesticks the past 3 days here. They've had a nice recovery. This is a higher yielding play, like a 4.8% dividend. That's what I like about them. Again, don't listen to me. I'm not an expert. Look at this stock down here. We're down like $1,000 on this stock. But yeah, let's go check out Tesla right here. So that's a well, I was gonna say classic Kathy Wood stock, but you know what? They're in aerospace. You know, they're a really cool company. So the only thing about Tesla is their automotive sales have unfortunately lost their growth. You know, for the PE, because they traded 160 times net income, which is very expensive. And look at their automotive business on Tesla. This is what's unfortunate. It's down 15% year over year. So Tesla kind of lost their growth, and for a high PE company. But if we go to their energy and generation business, this is kind of the good news. It's up 66% year over year. It's seen some very nice growth. And yeah, the margins just collapsed here. Net income fell 70% year over year. So I honestly, Tesla, if you try to value them from like net income, they're extremely expensive. Ooh, someone said thoughts on SoFi. Yo, I own that one here in my Weeble portfolio. SoFi Technologies, they just had some really good earnings. Oh yeah, well check out Duolingo as well. They've been doing great as well. So here's SoFi Technologies. This is a fintech right here. You know, they have their own banking charter. You know, they're a lending, they're in financial services. Like look at just their financial services business. This is why people love SoFi because the fundamentals are insane growth. You know, it's up 85% year over year to a new record. And SoFi is a profitable company because you know, if we zoom out to last year, you know, they used to lose net income every quarter. So now they're actually making net income every quarter. So SoFi is one I do like. I do own a little bit of them, so I might be biased. But yeah. Oh yeah, let's check out Duolingo, Tyler. Yeah, dude, I've been recommending this stock for a long time. I too bad I don't own any because, you know, I wish I did this. You know that boring language learning app Duolingo? Well, they deserve to be at all-time highs because they're a subscription model company. You guys won't believe the subscription revenue growth, which is all reoccurring revenue. It's up 48% year over year. That is nuts, up 48%. You know, they're in advertising. The advertising revenue is up 6, but that subscription growth is incredible. And they're making net income every quarter, free cash flow every quarter, and they have no debt. Yeah, they're on my debt-free watch list right here. So here's like a bunch of stocks with no debt, like GameStop, DocuSign, Duolingo, Pinterest. They all have no debt. So let's see here. Loving PayPal right now. Yeah, dude, PayPal is a huge buyback stock. You know, PayPal does a ton of buybacks. You know, I believe Nancy Pelosi just took a stake into this stock as well. You know, if we go to the net income right here, they just make like 1 to 2 billion or 1 to 1.5 billion of net income a quarter. It was up 44% year over year, 1.3 billion of net income. That was very nice. So they actually grew their margins, which was a great sign. Look at that, 43% net margin growth. Was that real? Um, that was real net margin expansion. So yeah, PayPal deserves this little rally that they've had. I do like them. They do tons of buybacks as well. You know, let me go check Nancy Pelosi's portfolio real quick. I believe her most recent purchase or her second most recent purchase was PayPal. So Nancy Pelosi, she's been buying the dip. Thoughts on yo? What up? Take Two. So yeah, this is the company that owns Rockstar Games. So they own GTA 5, GTA 6, and they just announced on this day that GTA 6 release date is going to be delayed. So the release of GTA 6 is delayed, and you know that's kind of why the stock has been rallying. They're pretty close to an all-time high even still, but they've been rallying on the news that GTA 6 is going to be huge. So many people are going to buy them, going to make them a lot of money. So yeah. What? Oh, yo, Tyler. Yeah, if you want to get this app, it's in the link tree in my bio. It's the first link there. That's a brokerage. Ooh, oh, and someone said XYZ stock. Yo, that's Cash App. You want? Let me go back to Kathy Wood's portfolio. I feel bad for her because she owns XYZ stock. You know what? It's gone down so much that it's not in her top 10 holdings anymore. So this is the oh my goodness. So XYZ is the company that owns Cash App. So they're called Block. So look at this right here. The stock is done terrible, they're lower than they were in 2018. So yeah, if we go to this company's revenue, yeah, 67% of their business comes from Cash App. And look at that, they lost the growth. It's actually down 7% year over year. So that's probably why the stock fell. Net income fell as well. Yikes. So I'd be a little careful buying the dip on them. Want to see the growth come back there. What are we looking at today for long term? Oh yeah, someone's been saying Amazon. Yeah, Amazon's a great long term buy and hold. I've been buying the dip on this one. You can kind of see whenever I buy a stock, it shows the buy. I just like being completely transparent. Uh, I'll show you my every stock I own, how much I'm up and down on them. Because I go to a lot of other TikTok lives and no one else does that. So anyway, by the way, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I don't got none of that. Watch out for people impersonating me. But here's the good news about Amazon. Oh, the only thing I do have is a YouTube channel. I'd appreciate if you subscribe to it. And I'm also streaming on there. It's called Nathan Roberts in the link tree in bio. But anyway, look at Amazon. This was the great news. They grew their net income 64% year over year. So that was the good news. Their margin grew to an 11%, 51% net margin growth. So that was the good news about Amazon. But bad news, they actually had negative free cash flow because they're investing so much back into the company, which isn't a bad sign because they have so much cash. Like if you go to the cash from investing, they reinvested 29 billion back in the business, so or in like new endeavors. I'm sitting on all cash right now. Should I allocate into a single stock? Yo, what up, Cruz? Yo, I would dollar cost average, and what that means is again not financial advice here, but instead of spending all your money at once, you slowly buy into a company, but you want to make sure you're buying a high quality stock because look at this. I dollar cost average into this company, and well, I'm still down $1,000. So you want to dollar cost average into a high quality stock or an ETF like VOO, which is the S&P 500. And honestly, you should just get 8% of your money back a year with the S&P 500 historically, and it breaks your money up for you, diversifies it into, the top 500 US companies: Apple, Microsoft, Nvidia, Amazon, Meta, all the top ones by market cap. So again, not financial advice there. Ooh, what's up? Slow Five said Google. Yeah, dude, I also own Google. Here, I'll show you my position, or I'll do some. What? Yeah, hey, if you want to get this app right here, Nicola, it's in the link tree in bio. First link there. It's actually a brokerage. But let me give you some analysis on Google. They're trading at a dog cheap valuation. Google's literally trading at 19 times net income, so that's a very fair valuation. And if you go to the net income right here, here's was the best part about Google's earnings. The revenue was up 12% year over year, and the net income grew 45% year over year. So that means they're growing their margins. They own YouTube, they own Android, they have the Google Cloud. Like, look at just the Google Cloud business. I mean, they're in cybersecurity, they have their own quantum chip, they own Waymo. If anyone's heard of Waymo before, it's like an autonomy driving Tesla competitor. But yeah. Ooh, what up? Angel said Elf stock. So this is Elf Beauty. This is like a makeup cosmetics stock. Unfortunately, this company has lost their margins. That's why the stock, if you're wondering like, hey, well, how'd the stock go from 200 to 60? Well, I'll show you this right here. Despite the incredible growth, because this company has phenomenal growth, the sales are up 31% year over year. So incredible sales growth. I mean, look at the full year 2024. It was a record quarter. But here was the bad news. So look, the revenue was up 31, but the net income was down 35. So that means they're losing their margins. The net margins fell 51%. So that's why they fell. It's really all the beauty stocks. If you go to like an Estee Lauder, for example, oops, what did I just click there? Yeah, if we go to Estee Lauder right here, look at this company. They're like an Elf Beauty competitor. Stocks at an all-time low or multi-year low, and they do the same thing. They're in skincare, makeup, fragrance. So a lot of the beauty stocks are getting wrecked right now. You don't have a Discord? No, dude, I don't have a Discord, WhatsApp, Telegram. I don't got none of that. Watch out for people impersonating me. I don't sell anything. I don't got a Discord book, nothing like that. No course. Just all I have is a YouTube channel. So if you want to help me out, the best way to support me is just go subscribe to my YouTube channel. It's in the link tree in my bio. It's called Nathan Robert. So someone said SCHD. This is a dividend growth ETF. You get a over 4% dividend yield, and they own a lot of the high yielding stocks. Yo, Angel, thanks so much for the 2 roses there. I really appreciate you. But yeah, they own like ConocoPhillips, the oil stocks, like a Coca-Cola, a Chevron. Yeah, a lot of these are in like Buffett's portfolio. You know what? We'll go check more at Buffett's portfolio. Y'all know he just stepped down as the CEO of Berkshire Hathaway. Kind of crazy. But yeah, Coca-Cola is 10% of his portfolio, Chevron another 6. So yeah, a lot of the higher yielding stocks. November 2nd predictions. Yo, I don't got any predictions. I'm a ooh, TSM, yo, I love this company right here, Taiwan Semiconductor. This is like, I wish I bought them instead of AMD here. Oh yeah, oh yo, what up, Adrian? Yeah, remind me to look at SoFi. We were just looking at them just a second ago, so remind me to look at them. But look at AMD for example. This we're down 18% on them. I should have bought TSM over AMD because Taiwan Semi is such a great company at a low valuation. They're trading at 21 times net income, and you get a dividend with this company. Get a 1.4% dividend yield. AMD doesn't give a dividend. And look at this huge market share for wafer chips. They make like those 5 nanometer wafer chips. It's their market share is 67%. And if we go to the net income right here, it's up 55%. They're making 10 billion of net income a quarter. Yo, hey Ariel, yeah, if you want to get this app right here, it's in the link tree in my bio. It's the first link there. We go to Edzilla. Hope you're doing well too. Thank you, man. I appreciate that. Oh yeah, so someone said Hims right here. So Hims reports earnings tomorrow. Or no, today in a couple hours actually. So in 3 hours, this stock is either going to be up or down a bunch. So I am curious to see what they do. Here's why. Everyone loves Hims, and you can't make this up. This is why they deserve the hype. Look at the revenue growth. It's doubled. It's up 95% year over year. So the fundamentals align with the nice stock price appreciation, and they're profitable. They're making incredible free cash flows, incredible net income now, and they have no debt. Hims is a debt-free company. They have 300 million of cash and no debt. They're on my debt-free watch list here. Uh, Here's a stock. You know what, Gabe? He said IREN. Let's check this stock out right here. So, this stock is only worth $1.4 billion. Very small company. The stock has done nothing for a couple years. Let's see though. Are they selling anything? So look at that. They are selling something. The sales just jumped up to 117 million. So that's a really good sign. And they even made net income in the most recent quarter. They did lose 50 million last quarter, but the sales really just spiked up there. They have a really good balance sheet too while growing their assets. So hey, this one I wonder why the stock has gone down so much. Maybe there's like a huge dilution or something. I don't know. I need to do some more research on them, but they look really interesting. Um hey, yeah, I appreciate you, Swiggy. Yeah, I just try and show you the numbers for yourself so you can draw your own conclusion. I'm definitely not an expert. Don't listen to me. Here's a stock that has super impressive fundamentals. Another debt-free company, by the way. Palantir has no debt. Palantir reports earnings today in also 3 hours, same time as Hims and Hers. So here's the good news about Palantir. Unbelievable growth. The government loves them. Nearly every police station is using Palantir software. I mean, the revenue is up 40%. Incredible. Same with the commercial revenue. Commercial revenue is up 31%. That's with like S&P 500 companies, but they have a monster balance sheet as well. But the valuation for me is just too high to buy Palantir. They're trading at over 100 times sales, not even net income. They're trading at 100 times sales. So they need to literally 4x the business before I could like or reasonably buy them, but they deserve the hype. Let's see here. Yo, what up? Legend said SGHC. Well, I've never heard of this one before. Super Group. So, wow, the stock's done really good. Look at that. It's at a new 52-week high today. $4 billion company. Geez. They're a European company, so we'll switch their revenue to into US dollars just for simplicity. So Betway. I'm not sure what that is, but look at the growth. That's why, see, companies with good fundamentals, growing fundamentals, the stock price follows. The sales are up 45%, up 12%. So great growth here, and they're now profitable. They made net income in the most recent quarter, and it's real. So yeah, actually, that one's really interesting. I'll add them to the watch list. Uh, they're actually pretty interesting. Let's see here. What do you think about CVS? So yes, CVS, this is a way better buy than Walgreens. Stay away from Walgreens, but CVS is a bit of a better one because honestly, this is a nice dividend play. You get a 4% dividend yield, so you basically get 1% of your money back a quarter. They trade at 16 times net income, very fair valuation. But here's the good news is the healthcare benefits business. I mean, this has seen some really nice growth. I mean, if you kind of look at it on an annual basis, it's 130 billion of revenue for them. What about pharmacy? That's up 6 health services. So yeah, and if we go to the net income right here, they had a little one-time adjustment. Usually they make 2 billion of net income a quarter or just under that. So yeah, their dividend is definitely sustainable. They have like a actually 50% payout ratio, which isn't too nuts actually. Again, be careful with some individual stocks. Stay diversified. Not financial advice here. Okay, well, here's another one that I haven't actually looked at Lucid in like probably a couple months. I haven't heard anyone say Lucid. I feel bad. I didn't know there were any Lucid shareholders left out there because unfortunately, If you don't know, this company just they dilute you and they lose so much money. So if you look in the top right, here's why I would never buy this one even at all-time lows. And again, I'm not trying to bag on anyone's stock here. If you look in the top right, this company's worth the whole company's worth $7.3 billion. So the whole company's worth 7.3 billion, and just in the past year, they've lost 2.5 billion of net income. So they've lost 30% of the company on top of diluting you 12%. So you own 12% less of the company. Unless the Saudis bail them out, I think they're going bankrupt, unfortunately. They're kind of like a or like a Mullen Automotive, dude. Like they're gonna be the next Mullen. Unfortunately, they should just slowly keep on bleeding out unless they can get net income positive. Yo, Monkey D. Luffy, what's up, dude? Good to see you. He said thoughts on Coca Cola. Dude, that's a classic Buffett stock. I love Coca Cola. I wish I honestly owned them. The stock's at an all-time high. They're doing way better than Pepsi. Coca Cola has been the buy over Pepsi. And even if you buy them right now, you still get a 2.8% dividend yield, completely sustainable. They raise their dividend every year. And look at the net income right here. They make just literally 2 to 3 billion of net income every quarter. Then you just pay a lot of that out in dividends and stock buybacks. So yeah, that they've been a great performer over the long run. Warren Buffett's happy about that one. Oh, here's a cool apparel stock. So I'll start off by saying I just completely sold out of Nike. I timed this pretty fortunately. I sold all my Nike at $79, and well now it's $57. And a lot of the apparel stocks are getting crushed right now. Here's Crocs, for example. I actually really like Crocs because of the valuation and good fundamentals. I'd way rather honestly buy Crocs than Nike. So look at the Crocs brand right here. If you kind of look at it, it's up 4% year over year. Not bad. But honestly, here's something you may not know. Look at Hey Dude. Unfortunately, Hey Dude is down bad. They, well, if the quarter before, they were down 17%. So we're comparing already into a whole. But yeah, the fundamentals on Hey Dude kind of collapsed. But the good news, they make so much net income. They made 380 million of net income. It's up 45%. When Nike's net income is down, like down bad. Cash from operations, not bad. Yeah, actually, and they trade at a very low valuation. The PE is a 6. They trade at 6 times net income. Oh, yo, Skechers got taken private. Has anyone heard of Skechers? I don't know how to spell it. Is it like this? Skechers? They basically they were publicly traded and now they're going private. Yo, what up? Daily said Meta stock. Yo, I do own some Meta. So yeah, I sold Nike because the fundamentals were not good there compared to when I bought them. They actually Nike can no longer afford the dividend, unfortunately. So they're either gonna have to cut their dividend or oh, that's I made a YouTube video about why I sold Nike. If you want to check that out, yo, here's Meta right here. Someone, yo, what up, Daily said, look at Meta stock. Yeah, dude, I absolutely love Meta. I do own them, so I might be a little biased. They're in my dividend growth portfolio. But look at this. Look at the valuation. Meta trades at 23 times net income, and look at the active users. Meta has 3.35 billion daily active users. So basically, half the world is on one of their apps every day, and the bottom line is incredible. They're making literally 15 to 20 billion of net income a quarter. The margins are incredible, 40% net margin. So if you go spend $100 on Meta ads, $40 of that is pure after-tax profit for them. Yo, what up, Runner said, Rain Metal. Yo, give me the ticker symbol on that stock and I'll check it out for you. VF Corp, yeah, so this is VFC, you're right. This company, they used to own Supreme. If anyone's heard of the Supreme brand, they used to be so hype. But they actually sold Supreme for $2 billion. They still own the North Face, they own Vans. Let's go see how they're doing. So, yeah, the apparel stocks, let's see. Net income, well, this is good news. They actually are making net income now because look at this. Here's why the stock collapsed. They were losing so much money every quarter. No one could buy this stock. But now it looks like they're finally making some net income. So we want to see them keep up that net income positivity. But yeah, I don't know. I'm not obsessed with a commodity or with yeah, commodity stocks. They just sell apparel. How many broker? I have 3 brokerages. I got Robinhood. Yeah, this is my main taxable account. We're up 0.46% on the day. We're up, or I mean, we're down year to date still, but this is my dividend growth portfolio right here. Oh yeah, what up, Catherine? Good to see you. Let's look at Grab Holdings. Yeah, forgot to look at this one. This stock will, I think, really interest y'all. This is they do what Uber does, but for everywhere else except the United States. So check this out. Notice there's no US or Canada on here. So this literally is an Uber. They do the exact same thing as Uber, and they now The largest shareholder of Grab Holdings is actually Uber. Uber took a huge stake into this company, which I think was genius because it gives them some instant international diversification. And they're now net income positive. They made net income the past 3 quarters. The free cash flow is ridiculously good. So Grab, I like that one. Just buy and hold. They have no net debt. I think they have 5 billion of net cash. So, someone said, "What do you think about BYD?" So yeah, BYD has been crushing Tesla. They make double the amount of net income that Tesla does, and the stock's at an all-time high, and the fundamentals are growing here. They have even Warren Buffett. Warren Buffett and Berkshire Hathaway owns a lot of BYD as well. So I wonder why Warren Buffett bought them over Tesla. But this company makes a lot of net income, more net income than Tesla actually. So yeah, I do actually like BYD, even though they're Chinese. Yo, ZT3 said, "What happened to SKX?" You know what? Let's check it out. Oh, Skechers. Yeah, so this company got taken private. So this company is going to be no longer publicly traded. They're going to be taken off the public market. So that's what's up with that. That's why they're up 25%. Oh, here's a cool one. Here's a high yielding dividend stock. This is OBDC, and this is actually kind of like their ticker symbol implies. This is a BDC, and so, literally by law, they have to pay out most of the income they make in the form of a dividend. So, you see how they had this 12% dividend yield? It's actually sustainable because they're a BDC, and I don't know, you still won't outperform the market in the long run owning this company, but you get the nice dividend. The stock price has done pretty decent. So, yeah, you won't really outperform the S&P in the long run with that stock, but you get the nice dividend. It's probably sustainable. What app do you? Yeah, hey, if you want to get this app right here, it's in the link tree in bio. First link there. It's called Momo. AMD before earnings. Yeah, dude. AMD is a stock that I do own. I'll show you my position after this. I'm down 20% on AMD, but they report earnings tomorrow. So tomorrow, this stock is either going to go up or down a bunch. So check out AMD. They have a 16% PC GPU market share, really impressive. But honestly, I love AMD as a data center play. Look at this. The data center business is at a new record, up 69%. This is what I just like to look at. I like to look at the numbers, see that the fundamentals are growing. The client revenue is up 58%. Look at the free cash flow. Free cash flow was a record, 1 billion of free cash flow. The operating profit was at a record. They have no net debt. So I'm honestly bullish. I hope they have a nice data center beat in the stock rallies, but that could be hopeful thinking, but because here's my position in AMD. Yeah, we were just looking at them. I bought them at $124 a share. So yeah, we are down 18% on AMD. Oh yeah, here's my other like risk on portfolio. Again, this is why you don't listen to me. I'm not an expert. We're down 9% all time in this portfolio. We've definitely underperformed the market. We got some nice winners in here though, like SoFi, Robinhood, Reddit. Yo, Reddit's up like 5% on the day. Super Micros, Anyway, let's see here. Ooh, yo, here's a cool one. Or actually, let me look at this stock first because I didn't get to this one. I apologize. This is AMPX. Oh yeah, so I'd probably stay away from this one. If you look in the top right, the whole company is worth $277 million. So that's a very small market cap. And look at this. Let's check the net income, and they lose 10 million a quarter, and it's getting worse actually. They're losing more and more money. The sales are great though. The sales are now 10. It's not hard to grow like just 10 million, but at least it's more than doubled from the previous year. I'd be careful with this stock just because they're burning a lot of money. Like they're losing like 20% of the company a year. Uh, oh yeah, hey Roman, if you want to get this app, it's called Mumu. It's actually a brokerage. It's in the link tree in my bio. It's the first link there. No, this is not Weeble. Let's see here. The other app is yeah, Palantir and Hims and Hers are tonight. You're right. So Palantir reports earnings in less than 3 hours. So in 3 hours from now, the stock's either going to go up or down a bunch. They have no debt. I'll give you the quick highlights here. The government just like hands them out money. Like the government revenue's up 41% year over year. That's incredible. Commercial revenue's up 30%. Like their contracts are incredible and they have no debt. Huge software name, high margin software play. But the valuation is really high. Um, so Ooh, dude, I wanted to look at OSCR. So this is like a health life insurance company. Yeah, Gabe, let's check out Oscar Health. So there's some good news and there's some bad news about this company. I'll show you the good news first. Check out the annual sales growth. I almost don't believe it. In 2019, or 2020, the sales were 589 million. Now it's 9.2 billion. Incredible growth. But I think the reason the stock has kind of been flat is because they're not making consistent net income yet. They did lose 153 million of net income in the most recent quarter, so I would like to see them consistently stay net income positive. But I love the growth there. Starting with 2K, wish yo, yeah, again, not financial advice here. I would put most of my money again, probably in just the S&P 500. You can't go wrong with this. The VOO, it breaks your money up for you into the top 500 companies: Apple, Microsoft, Nvidia, Amazon, or buy some of those companies individually. Like I own some of them. Like I own Amazon right here, 11 shares of Amazon. If I head back over here to my main dividend growth portfolio, I got actually every stock in here is in the S&P 500. I got McDonald's, Constellation Energy, Google, United Rentals, Meta, and United Health. Has anyone heard of United Health? They're down bad. Look at them year to date, down 19%. This is my newest purchase. We're up 1% on them. Not bad. Oh yeah, here's my Roth IRA as well. Small little Roth. So yo, what up, Taz? How's it going? Yo, what up, Todd? How's it going, dude? Palantir is 77. Oh, Jusman said BROS. The earnings come out on Wednesdays. So yeah, this is Dutch Bros. This is like a Starbucks competitor, if anyone's heard of them before. So let me show you the good news here. Look at the company operated shops. For a restaurant in this environment to grow their sales 38% year over year, this is really impressive in my opinion. So that's why they've done a lot better than Starbucks. If you look at Starbucks, their stock has collapsed because they lost their growth. But look at the net income here. They're finally making net income every quarter because they used to lose money every quarter. The free cash flow as well is now positive. So yeah, Dutch Bros, I do like that one. Let me show you Starbucks. I'm not gonna deep dive into Starbucks, but I'll show you their stock price. Y'all know Starbucks. Look at they have fallen the past couple weeks here, but they haven't fallen as much as I thought they would because the profits were down 50% year over year. It was very sad after being down already 15% the previous year. So they actually can't afford the dividend. With the net income they made in the most recent quarter, it doesn't even cover the cost of the dividend for Starbucks. Anyway, oh Nicola, you got 1500. That's very nice, dude. Dutch Bros was founded a real nice place. Oh, in Tri-Cities, Washington. Oh, cool. Um, Marsden said RBRK. I've not heard of that company. Rubric, like a Rubik's cube. Okay, let's let's check it out. So, $15 billion company. Stock's actually done great. It's pretty close to an all-time high. Software and services. So they're a software company. Actually, let me just go to their revenue down here. So the revenue's up 47%. That's actually very nice growth. 47% growth in the net income. They're still losing net income, but it's not as long as I can grow out of that. Yo, Jiyun Slime, thanks so much for the rose. He said, what apps you use? Yeah, if you want to get any of these apps, they're all in the link tree in my bio. This one's called Mumu. It's the first link. This one's called, they're actually brokerages. So this one's called Robinhood. It's the second link in my bio. This is a very simplistic app. I like this one. I have my Roth IRA with Robinhood. You cannot have a Roth IRA with Mumu. You can only have a main. This is where I like to park my idle cash because you get the nice 4.10% APY. Anyway, yeah, if you want to get it, link tree in bio, first link there. Let's see. Appreciate for the roast, man. Yeah, no problem. Oh, here's a stock I would absolutely avoid. Has anyone heard of like those collector things, the Funko Pops? No way this stock is even existing. Those Funko Pop collectible like dolls. I don't know what they are. They're a publicly traded stock, and unfortunately, they're going bankrupt. If we look in the top right, this whole company Funko Pop is worth 200 million. So that's a very small market cap, 200 million. And if we go to the net income down here, it's actually not terrible. It's not terrible because they're not losing that much money. I mean, they used to lose a lot of money, but as long as they can keep up this net income positivity, it's not terrible. But I mean, nothing's really blowing me away here to really want to buy Funko Pop stock. I mean, they just sell a commodity. I mean, let's see, core collectibles looks like if we look at on an annual basis, it's down from 2021. Nothing's really blowing me away there. I'd be careful with that one. Oh, I forgot to get into this stock. Yo, Daily, appreciate you being here. Yeah, let's look at Nvidia. Yo, I'm reading both the YouTube and the TikTok chat. Yo, by the way, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I don't got none of that. I don't sell anything. Watch out for people impersonating me. Yo, Ellie, Chayman, thank you so much for the cap. No way for the TikTok hat. I really appreciate you. Ellie, is that how you say your name, or Eli? I really appreciate you. Ellie, I think it is. Thank you so much. If you got a stock you want me to look at, let me know. So here is Nvidia. We'll do some analysis on them. They have an 18% PC GPU market share, really big market share for GPUs. Very impressive. And the automotive business is growing as well. They partner with GM and Cadillac. But the best part, about Nvidia is the net income. They made 22 billion of net income just in the most recent quarter, literally a new record, up 80%. And at this growth rate, what's it going to be this time next year? That's incredible net income bottom line. And Nvidia is so big that they own some individual companies. If we go to Nvidia's portfolio, they own part of ARM, they own RX. Actually, RX is down bad. Please stay away from this company. They burn money hand over fist. But they own some APLD, which is pretty decent, Nebius AI. So yeah, Nvidia is really big. Hey, yeah, appreciate that, Ellie. Thanks again. If you got a stock you want me to look at, please let me know. Is Apple a good one to buy? You know what? That is Warren Buffett's and Kathy Wood's. And, I mean, Warren Buffett and Nancy Pelosi's largest holding. So we'll go to Nancy Pelosi's portfolio. Her largest holding is Apple, and here's what I like about Apple. Look at their smartphone market share right here. They actually have a 23% smartphone market share. iPhone is half their business. The best product they'll ever sell. But then they have the services revenue, because whenever you go and buy something in the App Store, Apple takes a 30% fee on that. And this is all high margin for them. It's at a new record, like 90% margins for them. But here's why Apple's so affected by tariffs. They actually have a lot of exposure outside the US. Look at that. Only 36% of Apple's revenue comes from the US. Did y'all know that? They did also report earnings. Let me check them out. They made 25 billion of net income in the most recent quarter. Hey, not bad. Not bad, not too shabby. So yeah, that's a great dividend growth company. That's also Warren Buffett's largest holding. Yeah, 23% of his portfolio is in Apple. What is your target on Nvidia? Ooh, thanks again for the cap there. I appreciate that. And yo, COYG, if you want to get this app, it's in the link tree in bio. First link there. Honestly, Nvidia's a $150 stock in the long run. Like, they'll probably be there within a year. Again, not financial advice here, but they just they just have this incredible net income growth, and the net income's just expected to keep on growing. They always beat. Like, look, if you assume like 29 billion of EBITDA, they're trading at like 23 times EBITDA, which again, honestly, that I don't have the best prediction. That probably wasn't too helpful. I apologize there, but I do like Nvidia as just a buy and hold for the long run. The growth there is incredible. Yo, Doodle said TSME. Wait, TSME. This is an ETF right here. Hey, what up, Doodle? Appreciate you being on the YouTube stream. I'm streaming on both YouTube and TikTok, by the way. So if we go to this ETF's holdings, these are some weird holdings. Kindred, I've never heard of these, a lot of them. Celestica, LabCorp, FTAI Aviation, I've heard of them, but looks like a very interesting niche ETF. I don't know. Let's see here. So, oh yeah, what up, Noah? He said PBF, thanks. Let's check it out for you. Let's see. PBF Energy. So hey, unfortunately, looks like this stock has not done too good the past couple weeks here. Let's see, they pay a dividend. So look at that. You have a 5.6% dividend, but it looks like the net income just went negative if we look at the payout ratio. So yeah, look at that. That's, if you're wondering like, hey, why has the stock price gone down so much? Usually you just go look at the net income and look at this. They lost 500 million in the most recent quarter. That's not great. Or that's actually very bad. And they pay a dividend. That's 1/4 of the company they lost in net income. They can no longer afford the dividend. So honestly, PBF, unfortunately, I'd stay away from that one. Fundamentals don't look too good there. I just like looking at the numbers. Hopefully, you just draw your own conclusion. This isn't financial advice like this stock right here. I've done a lot on this one. Oh, someone said, or Monkey D. Luffy, what's up, dude? He said, do you like any Japanese stocks? And I do. I like Sony. If anyone's heard of Sony before, the Sony PlayStation, this is actually a Japanese stock. If you look under the 25, it says JP. That means they're a Japanese company. And look, Sony is pretty much at an all-time high right now. Look at how diversified Sony is. Y'all won't believe this. Game and networking, which is the PS5. Then they're in financial services. They're in music. They have record labels and stuff like that. The music business is doing incredible. They just collect like high margin royalties. They're in financial services, and they pay a dividend. You get a 0.5% yield. They actually have a higher yield than Apple with a lower payout ratio. So Sony's pretty cool. Another Japanese stock I like is Nintendo. I won't spend too much time on them, but did y'all know Nintendo is publicly traded? Look, Nintendo stock's at an all-time high right now on news that they're going to release the Switch 2. Dude, the Switch 2 games, like prices are going to be like $80, are going to be ridiculous. So anyway, the stock's at an all-time high on that news. They own 10% of Pokemon as well. They're the only way to get exposure to Pokemon, like Pokemon cards and all that. So Nintendo owns 10% of Pokemon, which is pretty cool. So let's look at some more stocks here. Yo, Zone Today, what's up, dude? He said FTT stock. So this is a Canadian company. Let me know if you're talking about this one. So Finning International, they're a $5 billion company. Let's check out the, oh yeah, they're in Canadian, so we'll switch the revenue to US dollars just for simplicity here. So yeah, look at that. They're making like 80 to 100 million of net income a quarter. Do they pay a dividend? Yeah, 2.7% dividend yield, 30% payout ratio. Not bad. That one actually looks sustainable. Um, what are your favorite low market cap stocks to buy right now? Honestly, I really like Dave, ticker symbol Dave. It's kind of hard to buy them right now. They're worth 1.4 billion. They're not that much, very small market cap. Um, I like Reddit as well. You know what? Let me show you another one I have in my Roth IRA. Actually, here's I just made a YouTube video about this stock. I'll kind of share with you what I did in my YouTube video. This is INOD. This stock is up 500% the past year, but I bought them. I'm only up 15%. That's nothing compared to how they are the past year, but I think this stock could easily double from here, and I'll show you why. Again, not financial advice here, but I actually think that this stock right here has a realistic chance of doubling within the next 2 years. And if you want to see more, go watch my most recent YouTube video. But it's for this reason right here. They have no net debt either. Look at the growth of their sales. It is up 161% year over year. This is incredible growth. I don't believe it. The agility revenue is up 25%. They're now profitable as well. They're making a lot of net income in the two most recent quarters. They're growing their assets while lowering their liabilities ratio. It's incredible. Cash from operate. Everything about this company is doing crazy. And their main customers are literally Google, Meta, Microsoft, and Nvidia. Those are their five main customers. So go watch my most recent YouTube video if you want to see more about them. It's called Stocks That I Think Could Easily Double. Um, let's see. If I was gonna buy a stock with a dividend, what would be your suggestion? I for a lower yielding dividend stock like Google, Meta, easy dividend stocks, but you probably don't want a dividend stock with like a super low dividend yield. Here's my personal highest yielding dividend stock. You can kind of see I've been dollar cost averaging into this company. I bought some way higher at 47, and I bought some down here at 35. But this company, in my opinion, has a very sustainable 4.8% dividend yield. I've made multiple YouTube videos about how it's sustainable, so if you want to check it out. Yeah, by the way, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I don't got none of that. Watch out for people impersonating me. The only thing I do have, though, is a YouTube channel. So if you just want to help me out, the best way to support me is just go subscribe to my YouTube channel. I'm also streaming on there. And you can replay if you missed anything. So yeah, someone said predictions on SoFi end of year. Yeah, Jack, on SoFi. I do own 25 shares of this one. Honestly, this is like a $15 stock. I really like It's $15 or more stock, I believe. Again, here's why I really like SoFi. You don't want to have a huge chunk of your portfolio in this kind of company, but the growth is phenomenal. The financial services revenue is up 85% year over year. Like, that is some impressive growth. 85% year over year, and that's just the financial services. And they're net income positive. They're making net income every quarter. Literally just last year, they were burning money every quarter. So yeah, people are starting to really take SoFi serious. They're growing their fundamentals. They have their own banking charter. They're stealing client assets. So I really like them. Um, hey, what up? Yo, thank you, Sebastian Gracias. What's up, man? Are you gonna trade Palantir? Nah, man. Palantir reports earnings. It's hard to trade something before earnings. Yo, someone in the YouTube chat said, Chevron. You know what? That's a nice Warren Buffett stock. So if you go to Warren Buffett's portfolio, 6% of his portfolio is in Chevron. So this is a nice dividend stock, and you get exposure to oil. So yeah, if we go to the dividend right here, you get a 4.9% qualified dividend with this company, 67% payout ratio, which is normal for a. Yo, D01, thanks, dude. The three roses, I really appreciate you, man. Thanks for the three roses. He said predictions on the SPX. So the SPX is just the S&P 500. So yeah, honestly, I don't really know. That probably honestly the S&P 500. I'm just a believer that the S&P 500 should just return 7 to 8% of your money every single year. The way to get exposure to the S&P 500 is through ticker symbol VOO. Um, you should just get 8% of your money back a year. You start with 100, then the 100 turns into 108, and then you compound it. So then it starts from 108 to 130, then 130 to 180. You kind of get the idea there, the compound. I like the S&P 500. You just buy and hold that one. You don't really trade it. Just buy and hold for the long run. That's why like every American's retirement accounts with them. So yeah, I love the S&P 500. Thanks again, dude, for all the roses there. Yo, Lamar, dude, Lamar as well. Thanks so much For the two roses. Yeah, if you got a stock you want me to look at, let me know, Lamar. Actually, there's a stock called Lamar Advertising. They literally have the largest market share for billboards. If you've seen like billboards before, they're a REIT, and they have a super sustainable 4.6% dividend. So yeah, this is a billboard company. Yeah, here I'll show you that. Look, billboards are 86% of the revenue. They own the real estate under them as well, so they're cool. Um, let's see here. SPYI. That's it. Yeah, this is the as this just sells calls on the S&P 500. So just because of the nature of selling calls, you'll never outperform the market in the long run with this ETF. But what you do get with this ETF is a monthly dividend, just because they sell calls and they just pay out in dividends the premium they collect from selling calls. So yeah, I'd like to just sell calls myself, because they have a really high expense ratio, but they're not bad if you're just trying to maximize the net income. Hey, Ellie, thanks so much for follow me. I appreciate you. Yo, thanks again for the gift. So I'm gonna follow you as well. I appreciate you. And by the way, watch out for people impersonating me. I usually never follow anyone. By the way, I don't sell any. I'll never DM you. I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. I don't got none of that. So let's see. Nara said, "Tell me about DX." So this is Dynex Capital. I actually used to own this stock right here, but I sold it probably 2 years ago. This is a BDC. They actually have to pay out most of the income they make in the form of a dividend by law. They have a monthly dividend, but yeah, you're not going to outperform the market with this one. The numbers look a little choppy. Like if we go to the revenue, like how does the revenue like sometimes go negative? I don't really understand this company too much, but the stock hasn't done terrible despite the weird fundamentals. So yeah, they're not terrible. Yo, PS, what's up, dude? Oh yeah, Chavo, he said thoughts on hymns. Yeah, so this company reports earnings in 2 hours. So in 2 hours from now, this company is either gonna be up or down a bunch, which will be very interesting to watch. And the cool part about this company is here's why they deserve Oh, sorry. Here's why they deserve all the hype around them. The sales, the fundamentals are growing. They're up at 95%. Sales are up 95% year over year. Incredible. And they're now profitable, making free cash flow every quarter. They're making net income every quarter. And they have a monster balance sheet. Literally no debt at all. They're literally a debt free company. They're in my debt free watch list. Yeah, here's a bunch of debt free stocks, by the way, if you're curious. Hopefully, you can find one or two stocks you can add to your watch list. Again, not financial advice. Like Duolingo, dude, debt free company. They're at an all time high today. Pinterest. Has anyone heard of the Opera GX browser? Did y'all know they were public? They're only worth 1.5 billion, but they're kind of seen as like a Google spinoff. Google DOJ stock. Zoom, Reddit. I love Reddit, dude. Anyway, yeah, I hope HIMS can beat earnings. You like CEG? Yo, I love Constellation Energy. That's one of my largest holdings here. So I'll be super quick about this stock. This is the largest nuclear energy stock in the world. They own 55% of all the US nuclear energy reactors. They're the largest nuclear energy play, and that's why I love them. So they're a nuclear energy stock. I got 3,700 in them. So I do like them. They have a nice growing dividend. They do buybacks. So let's see. Bro is purposely ignoring me. Yo, I promise I'm not. Let's see. Let me find your comment here. I do apologize if I don't get to your stock share. I'm trying to get to all of them. SKBL. Let's check this one out here. So I've not heard of this one. So Skyline Builders Group, let's check them out. So they're a very small company. They're only worth 300 million. So that's a very small market cap, 300 million. But let's check out the fundamentals right here. So they literally IPO. Like we can't zoom out that much because they just IPO. But looks like they are making net income, but the net income was 500,000, so not that much. They're just a really small company. Yeah, since they just IPO, there's not much data I can look at here. I do apologize. That probably wasn't too helpful there. So how do you know what specific stocks to look at? After just looking at a bunch of stocks over time, I just select the high quality ones. Like did Comfort Systems this is a multi-bagger since 2019. I didn't buy it back then. They've 10x'd, but dude, Powell Industries, great fundamentals, debt free, 20% cash. They report earnings tomorrow, so that'll be fun to watch. Let's see. Should I sell my Celsius stock? So actually, here, let's go back to the debt-free watch list. Celsius is a debt-free stock. But here's the bad news about Celsius. They actually lost their growth. If you're like, what happened to this stock? How did it go from $90 down to, 35 where it is today? Well, that's because if you go to the revenue is down 5% year over year. So they lost the sales growth. And if you go to the actual profits, they actually lost money in the most recent quarter. So that's unfortunate here. But they just acquired Alani. If anyone's heard of Alani before, they sell like energy drinks too. They just acquired them. Yo, Ellie, thanks again for the rose there, for the heart. I really appreciate that. Yo, Juan said, "Okay, you are. What's up, yo? What's up, runner? Yeah, we'll look at RHM as well. Wait, okay, you are. Okay, here we go. Onker Therapeutics. Yikes! They're only worth $30 million. The stock's at an all-time low. I can almost bet they just burned net income. So yeah, remember this whole company's worth 30 million, and just in the most recent quarter, they lost 35 million. So I can honestly understand why this stock's at an all-time low. Unfortunately, they probably should just keep on going lower and lower and lower. So let's look at RHM. Oh yeah, we'll look at InnoData as well. Yeah, we've already looked at InnoData a couple times, Steph. I appreciate you being here. Wait, I type in RHM. I can't find that one. RHM. Yeah, unfortunately, runner, I can't find that stock. I do apologize there. Yeah, see you later, Ellie. Take care. Have a great day. Yeah, hey, if y'all want to hit the follow button, by the way, we go live every day, twice a day. We just look at stocks and stuff, and I don't sell anything. No course, book, Discord, WhatsApp, Telegram, none of that. Oh, I wanted to look at XLE as well. Yeah, we'll look at InnoData as well in a second here. Remind me. So here's XLE. This is the energy ETF right here. So if you go to their top holdings, it's a lot of the energy oil stocks: Chevron, Exxon, ConocoPhillips, Williams. Dude, I love Williams. This company is impressive. Oh, here, look at this app right here. It's telling us there's some technical analysis. Let's see. What is this? Megaphone bottom, and the rise probability is a 95% chance. Cool. Anyway, I've done a lot of analysis on Williams. Great company, and even if you buy them at all-time highs, you get a sustainable 3% dividend. So WMB is cool. Anyway, um, let's look at some more stocks here. Let's see. Look at, is that actually I cup? I see. Yeah. Okay, Dave. Okay, wait. SPLG. What's this one? SPLG. So this is the, oh yeah. This is just the S&P 500. Okay, yeah. You should just get 8% of your money back a year. These are the top holdings, Apple, Microsoft, Nvidia, Amazon, Meta, all the top, 500 companies in the US by market cap. Ooh, here's a just high quality company. If you guys just want to know a high quality company, Waste Management. And yo, Japi, thanks so much for the three roses. Yeah, we'll look at Nebius after this. Yeah, Japi, thanks so much for the three roses there. I appreciate you. We'll look at them after this. But here's Waste Management. Incredible company. Trash isn't really going anywhere. Their business is always going to be in demand. Look at the dividend. Even if you buy them now, you get a 1.3% dividend yield. If we go look at the net income, they make like 800 million of net income a quarter. The second largest shareholder is Bill Gates. So Bill Gates sees something in this stock. Bill Gates is the second largest shareholder. He owns 8% of the company. So yeah, Waste Management, great. Just buy and hold and forget about it. So yeah, thanks again, Joppy. He said NBIS. So if we go to Nvidia's portfolio right here, Nvidia actually owns some of that company. So 11% of Nvidia's portfolio is inside Nebius. Now, I've looked at the fundamentals here. They're a little weird. So if we go right here, check this out. Nebius triple 10. Let's see. You know what? How's Nebius doing? Like, um, on the annual basis, you know what? We don't have the quarterly data. Let me just go to the revenue down here. So the revenue, look at this. That's actually really good news. The revenue's up 37 million. The net income, they are still losing net income. So yeah, they're losing like 100 million a quarter. But the sales growth is good. Good balance sheet. Well, oh yeah, hey Magnus, if you want to get this app right here, it's in the link tree in my bio. It's the first link there. It's actually a brokerage. Yo, Zero T. Thanks so much, dude. The 16 roses, bro. If you got a stock you want to look at, let me know. Zero T. I really appreciate you. Um, Thank you, man. Bill Gates is a really bad guy, but not gonna lie, his stocks are booming. Oh yeah, dude. It's the Bill and Melinda Gates Foundation that owns this. Is the second largest shareholder, so I don't think it's individually him. But yeah, ooh, someone's been saying Berkshire Hathaway. Did y'all know Warren Buffett just stepped down as the CEO of Berkshire Hathaway? So yeah, Berkshire Hathaway has crushed the S&P 500. It's pretty close to an all-time high. And check this out right here. This is the good news. Like they own Geico. If you've heard of Geico before, they're in manufacturing, they're in all these different industries. Yo, Denise, no way. Denise, thank you so much for the heart there. If you got a stock you want to look at, let me know. Thank you so much, Denise. I really appreciate that. But yeah, Berkshire Hathaway, you just can't go wrong owning this one. They make a lot of net income every quarter. Well, the net income did just fall. I wonder if that was like a one-time adjustment there. But yeah, Berkshire Hathaway has been crushing the S&P 500. But yeah, Zero T, dude. Thank you so much for and Japi for the 11 roses. I really appreciate you all. My job banned dang, really, Zero T? That sucks. So what do you think of RR? So this is Rich Tech Robotics. So honestly, you're probably not gonna love my opinion on this company, just because if we look in the top right, here's why I wouldn't trust a lot of my money with this company. I'd maybe have it a fund like 1 or 2% position. Like if I go here, I have a lot of those kind of companies, like a SoFi, Robinhood. I don't like to put a lot of money, like a Yelp. I don't like to just put a couple hundred in here. But for Rich Tech Robotics, the whole company is worth 244 million. And look at this right here. If we go to the sales, this is why they're not worth anything, because they don't sell anything. The revenue is $1 million, so they don't really own anything. They don't have any intellectual property. They don't have any patents, and they lose net income every quarter. So if I was looking for a real robotics company, first off, Amazon. Amazon's a great robotics play, but another pure warehouse robotics stock is SYM. This is Symbotic right here. This is my favorite robotics company. They haven't been doing too good either, but this one actually has a lot of revenue. If you look at this right here, it's incredible growth. But this company isn't making money yet. They're still losing net income. But hopefully that was helpful there. I do apologize. That probably wasn't too helpful. Kind of bagged on RR there. But I just like looking at the fundamentals there. You can draw your own conclusion. But thanks again. If you got another stock you want to look at, let me know, Denise. Um, let's see. Big Bear AI. So this is BBAI. So honestly, there was some really bad news in the most recent quarter. So here's why they kind of gapped down right here. So if you look in the top right, you see market cap. This whole company is worth $940 million. So remember that the whole company is worth $940 million. Look in the two most recent quarters, they lost 70 million in the most recent quarter, and the quarter before they lost 150 million. So they literally lost 15% of the company just in one quarter, another 6% of the company in the most recent quarter. So I would honestly very much stay away from Big Bear AI. They're they're they just lose so much money. I need to see them get profitable. Yeah, Magnus, you're right. Berkshire Hathaway gets the dividends and does it and then returns it through stock buybacks, through stock price appreciation. No problem. Just curious. Thanks. Yeah, Amazon. I like them too. I've recently. Oops. Where's my Amazon? Yeah, I now own 11 shares of Amazon. I bought my entire position just in the past couple weeks here. You can kind of see where I bought into them. Amazon. Here's this one. Just prints money. Look at that. They they're like making 15 billion of net income a quarter now. They're a huge uh cloud play. Like if you go to the Amazon Web Services business, just the AWS business has seen incredible growth. It's up 19% year over year to a new record. So that's actually the most valuable part of Amazon. The AWS makes the most bottom line for them. So yo, what is two cow? What's up, Happy? Let me type that in. Two cows. Oh, so here it is, TCX right here. So this is a Canadian company. Let's check it out. So unfortunately, the stock is at an all-time low. I assume the fundamentals aren't going to look good then. So yeah, this is, if you're ever wondering like, hey, why is the stock at an all-time low? Why are they doing so bad? Usually you just go to the net income and look at this. They just lost a record 42 million. They lost 81% more net income than the previous year. So they now have more liabilities than they have assets. So that's why I like looking at the fundamentals. It usually explains why the stock is either going up a bunch or down a bunch. Like if you go to Palantir, the fundamentals are incredible, so the stock's at an all-time high. So yeah, hopefully that was helpful. Nexion is my gamble stock. What are your thoughts on it? So let's check it out again. Um, it's okay to have some of those kind of companies, just small allocations. So this is a $200 million company. Yeah, very small company. Let's see. Do they have any sales? So this is actually a startup. They have no revenue. They've never sold a product or a service. So if you go to revenue, it says no data because they've never sold anything. So yeah, and dang, they lost $50 million after selling nothing. So they need to start. $50 million is literally 20% of the company. So yeah, I'd please stay away from that one. Yikes. Yeah. Again, hey, I'm not an expert. Look at this right here. We're down 9% all time in here. If you kind of look in the top left there, we're down 9%. We got AMD, we got Reddit. We're down 48% on Zoom. Shoo. Anyway, let's keep going. By the way, thanks for being here. If y'all want to hit the follow button, we go live every day, twice a day. We'll be live later today. And I'm also streaming on YouTube. So if y'all want to, the best way to support me, by the way, I don't sell anything, no course, book, Discord, WhatsApp, Telegram. All I have is a YouTube channel. So the best way to support me is please subscribe to my YouTube channel. I'm streaming on there as well. You can replay it. But here's Affirm. Has anyone heard of Affirm before? It's like a buy now, pay later stock. Maybe you've seen on Amazon, like buy now, pay later with Affirm, or maybe it's on Walmart.com. I forget. But anyway, look at the fundamentals here. Here's the great news. Oops. um, they're finally net income positive. So if we go to the net income right here, they actually made 80 million of net income for the first time. Great news. And if we look at the revenue is up 56% year over year, or 46%. So incredible growth, and they're finally profitable. The free cash flow hit a record 280 free cash flow. They do have some stock-based comp. That's why their net income has been negative, but they're finally making net income, so they need to keep that up. But one thing you do know, if we go into a recession, the buy now, pay later stocks will get smoked. People just won't pay back those loans. They originate the loans and they also sell them, which is cool. Uh, let's see. Thoughts on the wheel strategy? Yeah, I don't really do options, but it's not bad. Oh, here's one. Wreck-It Ralph's. What's up, dude? He said PCG. Can you check it out? Let's check it out. So this is a $37 billion company. There was a huge drop in 2018. Maybe that was from COVID. I'm not sure what happened there. Let's see what they do. So they sell, electric and natural gas. So, okay, they just sell commodities. Let's check out the revenue here. So revenue's up 2. The net income is down 13. But yeah, great news. They're making like 700 million of net income a quarter, and they have a small dividend, 0.4% dividend yield. They have a lot of room to raise the dividend. So yeah, that's actually not too terrible. They're making net income every quarter. They're probably doing buybacks as well. So yeah, that's actually not too bad. They're trading at 15 times net income. Yo, Panda said AMD stock. Yeah, AMD reports earnings tomorrow. So tomorrow, AMD is either going to be up or down a bunch. I do own that one. If you look at the top there, we have 1300 in AMD. We are down like 20% on them, but I do have some hope. I hope they can have a big data center beat. Here's AMD. You get exposure to GPUs. 16% PC GPU market share is actually not too bad. But this I really like as a data center play. Check out the data center business on AMD. It is up 69% to a new record. That's incredible growth in my opinion on AMD, up to a new record. The client business, that's up 58% year over year. So AMD is really growing their fundamentals. Free cash flows at a record, operating profits at a record, double-digit growth. No net debt, very good balance sheet. So that's one I'm just buying and holding. I think the risk to reward looks pretty decent, but I wouldn't buy them now because if you buy them now, you're basically betting on earnings. But I'm holding them. About time for a firm. Yeah, finally they're making net income. Buy now, pay later is honestly the worst stock. Yo, I heard y'all know Klarna. I think they're about to IPO. Klarna. Yeah, look at this. They haven't IPO'd yet, but they're another one that's about to IPO. Can you look at Qualcomm? Yeah, what up, Growl? QCOM. So, hey, what up, Trappy said, see, oh yeah, we'll look at CoreWeave as well. Yeah, I'm reading both the YouTube and TikTok chat. Hmm. So here's Qualcomm right here. I believe they make like the smartphone chips. I think they own Snapdragon. If anyone's heard of Snapdragon. Yeah, look at their smartphone chip market share, 21%. It's actually not bad. And if we go to the bottom line right here, this is what's so impressive. It's up 20% year over year. They're growing their margins. They literally make over 2 billion of net income every quarter. So the net income is very impressive here on Qualcomm. And you get a nice dividend. If you buy the stock right now, you get a 2.5% dividend, and the payout ratio is only at 36%. So you even have room to raise their dividend. So yeah, that's a nice dividend growth company. Oh yeah, CoreWeave. Oh, we could look at Tree as well. So this is CoreWeave right here. They just IPO'd. Nvidia owns like 5% of the company. Nvidia took like a $300 million stake, or not five, a $300 million stake in the company. So not 5%, but unfortunately, this company just IPO'd, so there's no data for me to really look at. I mean, we could see it Q4 from last year. The revenue is up 544% from 1 year ago. Incredible growth. That's the really cool part about CoreWeave. But only 10% of the shares are available to trade, so it's super volatile. It doesn't take much to move CoreWeave. Hyperscale Data, is that a ticker symbol? Is that a stock? Let me know. I'll check it out. Oh yeah, I want to look at Uber. We'll look at Uber after this. So this is Lending Tree. Dang, unfortunately, Lending Tree stock has not done too good since 2019, but let's see. Yeah, if you look in the top right, this is a $500 million company, so this is a very small market cap. They're in insurance, so let's see how the insurance is doing. Look at the growth there. Wow, actually, that is actually really nice growth. What about net income, though? Are they profitable? So the number's a little choppy, but they lost money in the most recent quarter, but the sales are growing. I do like that. It's not the end of the world, though. It's not too terrible. They're all right, though. I mean, I want to see them consistently make some nice net income. They're actually not bad. They're not as bad as I thought. BORR Drilling. Oh yeah, I meant to look at Uber. We'll look at Uber after this. So yeah, unfortunately, Borr Drilling. Yikes, $400 million company, stocks at an all-time low. So they're probably, well, no, look, the sales are up 20%. Net income did fall 7, so that means their margins, your margin fell 22%, but that doesn't explain why the stock has fallen so much. That's really weird. 16% dividend yield. Jeez, that might not be sustainable, but I don't know. Oh, looks like next quarter they're projected to lose net income. Maybe it was the forecast. I'm not sure. I have to do some more research on that one. So let's go look at Uber right here. This is a great company in my opinion. Look, they're at an all-time high pretty much. So if you've ever bought Uber, you got to be up on your position. So congrats if you own them. We can see their active users. Uber has 171 million monthly active users, up from 150. Incredible growth there on Uber. And look at this. This is what I don't believe. The business is still growing. Mobility revenue is up 25% year over year. Very impressive. The delivery revenue, like Uber Eats, that's up 21% year over year. And look at the free cash flow every quarter. The free cash flow is just incredible. They're making net income every quarter. So yeah, Uber, great, just buy and hold for the long run. Um, Not buying Hims right now. Yeah, so Hims, if you buy them now, you're basically betting on earnings because in 3 hours, I think the implied move was a 14%. So in 3 hours, this stock is either going to go up or down 15%. So yeah, if you buy them now, it's basically betting in earnings. But yeah, good luck to everyone holding Hims. They're a great growth company. Oh, someone said, is Apple a buy right now? So let's look at Apple. Yeah, this is they're the largest company in the world in terms of market cap, great buy and hold forever kind of stock. Look at their smartphone market share. Apple has a 23% smartphone market share. Yeah, look at that. iPhone is half their business. Literally half of all their revenue comes from the iPhone. But then they have the services. The second most valuable part of Apple is the services, because whenever you buy something in the Apple App Store, Apple takes a 30% fee on it. And they're actually in a lawsuit right now from Epic Games because of it. They actually lost. The CFO might literally go to jail. Uh, from the court order. It was pretty crazy, but anyway, that's the most valuable part of Apple. It makes so much net income for them. They made 25 billion in the most recent quarter. So Apple, just buy and hold one. Microsoft took them over as the biggest market cap. Let's go check that. No way, really? Let's go check. Uh, Search by market cap. All right, so y'all want to see the biggest let's look live together. Nike's worth 85 billion. So yeah, you're right. Look at that. Microsoft is worth 3.2 trillion, then Apple at 3, Nvidia at 2.7, Google at 2. Look, Google and Amazon are nearly worth the exact same. So pretty cool. Anyway, let's keep looking here. Oh, what up? He said Elf. So yeah, this is a cosmetic stock. Unfortunately, all the beauty stocks have been getting wrecked. And unfortunately for Elf Beauty, or there's some good news and there's some bad news. Here's the incredible good news. The sales are up 31%. This is incredible growth. They're taking market share. Look at the full year 2024. Record quarter, record year. But here's the bad news. So yeah, the revenue's up 31, but net income's down 35. So actually, if we go down here, their net margins fell 51%. So their margins have collapsed, but they're still making net income every quarter. They don't have a dividend to pay, so it's not the end of the world. But I'd really like to see their margins come back and see their net income growth. The sales growth are incredible there, but I think that's why the stock has fallen. What are these two apps? Hey, these are brokerages right here, Jack. If you want to get either of them, they're in the link tree in my bio. This one's the first link here. This is my favorite app right here for analysis. It's where I like to park my idle cash as well. Um, oh yeah, you can also like look at the super investors portfolios, like the quantum computing stocks. You can see Nancy Pelosi's portfolio. Yeah, look at this right here. Nancy's been buying PayPal, Disney, Comcast. Ooh, a cybersecurity stock, PanW. I really like Palo Alto Networks. Someone, let me know if you want me to look at them. I love that stock. So, let's see here. MU Technology. So, yeah, this is Micron right here. Yeah, this is a nice dividend growth company. The growth has finally come back for this company. So, yeah, if we go look right here, they have a 0.5% dividend yield. And look at the growth here of the net income. This is the good news. They're now making net income every quarter, 1.5 billion. Because if we zoom out to last year, this was the bad news. They were losing net income every quarter, but now they're making net income every quarter. So, yeah. Yeah, hey, Manny, this is a brokerage. If you want to get this, it's in the link tree in my bio. It's the first link there. Um, but anyway, yeah, I do appreciate y'all being here. If y'all wanted to follow button, we go live every day, twice a day. Oh, yo, BSL, we're gonna look at NVO as well. Nova Nordisk. Has anyone heard of Ozempic before? Ozempic is like that weight loss prescription. Well, this is the company that owns it, and apparently the stock has been falling recently because the Ozempic patent expires in 2027. which isn't great. But for yeah, look at this right here. 93% of the revenue is their diabetes and obesity care products. And but look at the net income right here. So pure weight loss pharmaceutical stock right here. Look at the net income right here. Incredible, incredible. They're making 2 to 4 billion of net income every quarter. You get a 2% dividend yield, very sustainable payout ratio. They just partnered with Hims as well. They partnered with Hims to sell a weight loss prescription on Hims. So very cool. I have STRL, very similar to Fix. Yo, that's also very similar to Powell Industries. Yo, let's check that one out, Manny. Is that Sterling? Yeah, Sterling Infrastructure. Yeah, they're very similar to like a Powell Industries. Yeah, and a Comfort Systems. This is one that I really like. They don't pay a dividend. I picked Powell Industries over this one because this one doesn't pay a dividend, but this one also has very nice fundamentals here. You know what? Let me just go to right here. The revenue is up 2%, but look at the wait. Is that real? It wasn't real. But the operating profit was up 11, so that's kind of the good news. They should make 30, 40 to 50 million of net income a quarter. Like the free cash flow is really good here. What's the market cap? Like 2 billion or 5 billion, and they're trading at 20 times net income. So yeah, Sterling, congrats if you own them. They've done pretty good. Would you buy Hims before earnings? Not with the meaningful position, because if you buy Hims, it's a bet into earnings because they're either going to go up or down 15%. Um, Opinions on Palantir. Oh, yeah, same with Palantir. Palantir reports earnings at the exact same time as Hims. Look at that. They better beat on earnings because the stock is already at an all-time high. So yeah, congrats if you own Palantir. If you've ever bought them, you'd be up on your money. The main highlight for Palantir is this government revenue. The government loves them. Nearly every police station uses like the Palantir software. It's up 41% year over year. Incredible growth on Palantir. Plus, they're debt-free. Look at this monster balance sheet. I mean, it's incredible. No debt on Palantir. I mean, fundamentals outshine. Unfortunately, the valuation is pretty nutty on them. They're trading at 100 times sales, which is can't pay that. Ooh, 23 says Datadog. I haven't looked at this stock in a very long time. This is a great cybersecurity software company, and you won't believe the growth of Datadog right here. So look at this. If we go to, actually, let me go to it down here. If we go to the revenue right here on an annual basis, I mean, this is incredible annual revenue growth. In 2020, it was 600 million. In 2018, it was 200 million. Now it's 2.6 billion. So incredible growth there. Are they making net income? And look at that. They're making 40, 50 million of net income every quarter. So that's the good news here. Um, what about free cash flow? Yeah, look at that. Wow, the free cash flow. They're making like 200 million of free cash flow a quarter. So yeah, Datadog's a pretty decent one. I like a CrowdStrike probably a little more. If anyone's heard of CrowdStrike or like a PanW. Um, what app? Oh yeah, hey, what up? Salute. This is it's a brokerage. If you want to download it, it's in the link tree in bio. It's the first link there. So someone said Honest. They are a debt-free company. You're right. So this is the Honest company. They are debt-free. If you look in the top right though, this company is only worth $500 million. So very small, very risky company, and they just sell a commodity. They actually just sell diapers and wipes. Actually, let me find that right here. So, yeah, look, diapers and wipes are 61% of the business, just commodities, skin and personal care products. But here's the kind of bad news. Like, they're not really making any net income. They do have a really good balance sheet. Like, I think they have like 50 million of net cash, but yeah, or with no debt. But I want to see them make some actual net income because the past 4 quarters, they haven't made any net income. So that's why the stock, I think, has kind of been flat. Oh, what up? 3DS. He said APLD. So yeah, if we go to Nvidia's portfolio right here, I really like this company. APLD is a stock that Nvidia owns part of. So Nvidia is a shareholder here. And here's the good news. There's some good news and there's actually some really bad news. Here's the good news. Look at the cloud service business here. It's seen some phenomenal growth. It's up 220% from the previous year. So immaculate cloud service growth. If we go to the data center business, this is actually sadly down 7% year over year. But here's kind of also the bad news. They're losing a lot of net income every quarter. Yeah, they're losing like 50 million of net income a quarter. So I'd like to see this company get profitable, but the growth of that cloud business was phenomenal. That's the one like really good thing I like about them. And Nvidia owns part of them. So it's like a mixed bag there. There's some good news, some bad news. Um, Ooh, yo, what up? Norman95. So he said RKLB. So this is Rocket Lab. Yo, this company sends rockets into space. Yo, 3DS, thanks again for the rose, dude. I appreciate you. So this is Rocket Lab right here. They actually have a backlog of $1.3 billion of orders that they haven't fulfilled. And they send rockets into space and do like Look at their space systems revenue, like the components. It's up 75%. This is what's incredible, the growth. This is why I actually really likes Rocket Lab. So the space systems revenue is growing like crazy, but you still got to be careful with this net income because they're losing 50 million of net income a quarter. So I'd be a little careful with that, but they can easily afford to do that right now. Good balance sheet, good sales growth. They can grow out of those net income losses. So this is Mumu right here. Yeah, if you want to get this broker, it's in the link tree in bio, first link there. So let's see here. Um, AGNC. Yo, AGNC, this is a BDC right here. So this is one of those companies that have to pay out most of their income in the form of a dividend, literally by law. So look at that. It says they have a 16% dividend. But here's the thing with AGNC. You just won't outperform the market in the long run. So as you know, when the stock price goes down, the dividend yield goes up. Uh, Here, I'll show you this on Robinhood. So, unfortunately, like, just look at the stock price. This is just not the kind of company you really want to own in the long run. It kind of just trends down over time because of the super high payout ratio. So, honestly, you buy it to maximize your dividend income. You won't outperform the market in the long run. Actually, I love dividend stocks, by the way. Every single stock that I own in here pays a dividend. These are all like dividend growth companies. Yeah, here's us on the day. We're up 0.67. Year to date, we're still down one. Look at us year to date, guys. At one point, I was down 15% year to date, $3,400. I was down. Now we're only down 1%. The market. This is why you just got to buy and hold. I didn't panic sell. I just held my stocks and then seen some nice recovery. Oh yeah, here's my Roth IRA as well. We just got two stocks in here. We got Kroger. Yo, congrats if you own Kroger. The grocery stores have been crushing it. Kroger's at an all-time high. Um, Oh yeah, hey Matt, this is another this app right here. It's another brokerage. It's the second link in the link tree in my bio. It's called Robinhood. If you want to get this brokerage, second link in bio. It's a very simple app, and I like it because you can have a Roth IRA in here. You can't have a Roth IRA on Moomoo, but you can have a Roth IRA over here. And what's cool is look, if you kind of look at the middle here, they have a Roth IRA match. So I've deposited $211 into my Roth IRA this year, and if you look right below that, the match they gave me $6.33 as a match, 3% match, which is pretty cool. So yeah, this is a cool app. I like them. Second link in bio for that one. But let's see. How's SoFi? You know what? Let's check out SoFi Technologies. They did just report earnings. The earnings were very good. They're consistently making net income. They're growing the fundamentals. Like if we go right here to the financial services revenue here on SoFi, I mean this is why they deserve all the growth and the hype. I mean it's up 85%. Incredible growth and record growth. The lending's up 18%, also to a new record. They're making net income every single quarter. When literally last, I do actually own a little bit of them in my portfolio, but yeah. Let's see here. Uh-oh. Oh, well, uh-oh. Hey, I'm lagging. Hey, don't forget to hit the follow button. We go live every day, twice a day. I might actually have to end the stream here. But we'll be live later tonight for sure, for sure. I'll try and look at a few more stocks here before this thing crashes on me. Uh-oh. Yeah, it's not moving my screen. Uh-oh, the cord has not worked. Okay, yeah, hey. Um, I'm the main way is, by the way, I don't sell anything. I don't have a course book, Discord, WhatsApp, Telegram. I'm just on here giving my opinion. Okay, it did work. Okay, we'll look at a few more stocks here. Yo, GXA, yeah, thanks again for the rose. I really appreciate that. Yeah, I really like SoFi. So someone said, how's Robinhood? Yeah, here's Robinhood stock right here. The fundamentals are so good, man. The revenue's up 50% year over year. So the revenue's up 50 and the net income is crazy. They made 330 million of net income when literally no one took Robinhood serious. They used to lose. Literally, look at that. They lost billions those quarters, and now they're finally making hundreds of millions of net income. So they're finally a profitable company. People can take Robinhood serious, and I take them serious. I do own, again, you don't want to have a huge chunk of your portfolio in like a Robinhood just because they're so risky, but I do own, look at that. I sold 50 shares for a huge profit, man. I was buying this stock. Look, in 2022, I was buying this stock at 12 under. I bought this stock at $8, or not much of it, but I bought it at $8. Dang, and they're at 48 now. So yeah, dude, that was, look at this. If I zoom back, like I was, look at this. This is where I was originally buying Robinhood. So I've been holding the bag on Robinhood for many, many years. Finally got to take some profits on them. Same with SoFi. I've been holding SoFi for many years. I've taken a lot of profits on them too. Yeah, I've been selling some I sold one at 16. What's it now? It's at 13 now. I don't want to sell any more of those shares. I just want to hold on to my Robinhood and SoFi for the rest of the time. Reddit's a cool new play that I have. Dave, Sprouts Farmers Market. Sprouts Farmers Market's so impressive. They just keep on growing their net. But look, you guys, look at this stock right here. It's moved more than Nvidia. Here's why they deserve it too. You won't believe this. The sales were up 18%, which for a grocery store in this environment is really impressive. But the most impressive part was the net income growth. They grew their net margin to an 8% record net margin on Sprouts Farmers Market. So they're kind of like a higher end grocery store anyway. But I just really like that. Yo, KC, what's up, dude? KC said AUR. What's up, man? So this is Aurora Innovation. So this is still, there's some good and bad news here. So if we go to this right here, here's the bad news. They're a revenue-less company. If you go to the revenue right here, they don't sell anything. This is data from 2022. So for the past couple years, they've never sold a product or a service. They've never received a single dollar of sales. And at the same time, they're losing like 200 million a quarter. So in my opinion, like though the stock has done really good, I think they have some really high quality contracts. I'm just staying away from that one. Nothing's really blowing me away there. They still haven't sold anything. So I'd be careful with AUR. Um, I bought SoFi at $4. No way, Trevor. That was a great purchase. Yo, Neil said GWW. Check this one out. I haven't heard of that one. So stock's done great. All-time high, $51 billion company. Do they pay a dividend? Yeah, 0.8% dividend yield. High touch solutions. This sounds niche. Sales are flat year over year though. So that's probably why the stock hasn't done too good. Yeah, the sales are up 1% year over year. So sales are up 1% and the net income is only up 0.6. So they margins stayed the same. Yeah, margins down 1%. The business is kind of flat, but the stock's done great though. That's the good news. The stock's done really good. Um yeah. They have a nice growing dividend as well. So yeah, that one's actually not too terrible. Um Pony AI. What's the ticker? What's the stock for Pony AI? I'll check it out. Dog, what's up, man? Palantir and AMD. Yeah, Palantir. I'll be quick about this one. I'm about to end the stream here too. I appreciate y'all being here again. If you want to hit the follow button, we'll be live later tonight for sure. We got to look at the earnings later today. And also, I'm streaming on YouTube. If you miss anything, you can replay the stream. The beginning of the stream was really fun. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But here's Palantir. They report earnings in 3 hours. Or no, two. They report hours in exactly 2 hours. And the government loves them, dude. Nearly every police station uses the Palantir software. The government revenue's up 40%. This is why Palantir is at all-time highs, growing like crazy. The fundamentals are growing. Government revenues at an all-time high. Commercial revenues at an all-time high, up 31%. And they have no debt. They're a debt-free company. They're just like HIMS. HIMS has no debt either. That's funny. Palantir reports today. And in 2 hours as well, we get HIMS earnings. This company also reports earnings. They're another debt-free company. Another one growing the fundamentals incredible. This is why people love Palantir and love Hims and Hers, because they're not just your typical stock. They're incredible growth companies. The sales here are up 95%. I mean, if just forget the name Hims, this is incredible growth. And look at that. They're now making free cash flow, 60 million of free cash flow. They're making net income every quarter. They have no debt with 300 million of cash. So Hims, the fundamentals are great. So that's why I think that one's a nice little just buy and hold forever. So, anyway, I do really appreciate in the stream here. Hope you guys have a great rest of your day. Thoughts on GPUs? Yo, Luffy, NVIDIA, oh, let me look at Pony really quickly because I said, yo, Dogs Talk. Let's look at Pony real quick. And then GPUs, AMD is my GPU exposure. But virtual driver operations, let's see. So here's Pony AI. Let me check the revenue right here. So did they just IPO or something? Yeah, so they just IPO. There's only 1 quarter of data we can look at. So yeah, this is really unfortunate. I wish I could give you more thoughts on this company, but they have a real balance sheet. Look at that monster balance sheet. Looks like 800 million of cash. The revenue was 35 million and they lost 180 million. That's not great. Looks like they're losing a lot of money. So I'd want to see this company get profitable. I need to see some more numbers on that one. But anyway, thank you all for being here. I hope you have a great rest of your day. My name is Nathan Robert. If you want to help me out, main way to I don't sell anything, no course, book, Discord, WhatsApp, Telegram. The thing I do have is a YouTube channel, so it would mean the world to me if you just go subscribe to my YouTube channel. It's in the link tree in my bio. It's called Nathan Robert. I just made a YouTube video. I think you'll find this really interesting. My most recent YouTube video is called 5 stocks that I think could easily double easily double. And I'll show you the real reasons. One of those companies is ticker symbol Dave. Another one is INOD. So if you want to go see those stocks, I'll show you the real reasons. Please go leave a comment. Let me know what you think about it. Have a great rest of your day. My name is Nathan Roberts. See you in the next one. We'll be live in a couple hours.